economy struggles to grow, Motown is finding it increasingly difficult to hit a higher gear. A volatile rupee coupled with policy inaction have left automakers stranded.
And with not much left to celebrate in the festive season, Motown is stuck in low gear. ET Now's Kartika Trihan with that special report.
The general gloom in economy, high rate of interest and costlier fuel have made a dent in sales, where the growth has nosedived to low single digits this year. But the bigger concern is that automakers are not seeing any kind of a revival even during the festive season. So clearly the pain is here to stay.
Car sales are barely crawling. Steep fuel prices, high interest rates and overall economic gloom has spelled trouble for Motown, which is stuck in the slow lane. Growth in sales have dropped to anemic low digits from the robust 30% growth 2 years back.
The overall outlook seems low, and that is a bit concerning. Volumes are down across the board.
But to make matters worse, the festival season, which contributes to 20 to 30% of total annual sales, doesn't look promising either.
There has to be a trigger. This festive season itself will not be enough to see the turnaround.
But auto companies are not slamming the brake on investments just yet. While Tata Motors says it will go ahead with 3,000 crore rupees investment, Honda Cars will invest 2,500 crore rupees, and Mahindra & Mahindra is also going ahead with its plans to invest 10,000 crore rupees over the next few years to expand capacity. In fact, Motown is also demanding steroids from the government as the pain becomes more acute.
Automobile industry certainly needs stimulus at this moment.
While slowdown is a big concern for Motown, there are pockets of exception as well. Ford has stopped bookings for its EcoSport SUV, while Honda has waiting list of 15 to 20 days on its Activa scooters. But those sparks don't light a larger fire, and slowdown is a reality in auto sector. Sumit Chaturvedi, ET Now, New Delhi.
Carl Slim of Tata Motors say that they are reviewing the situation for a price increase and is keeping inventory with 1 month in stock. Tata Motors say that they understand the necessity of new product launches and the need to change their product portfolio.
There's always a review of what's happening with commodity prices, what's happening with fuel prices, what's happening in the market that's affecting our costs, and at that time we have to review our price increases. So it's not just one thing, it's a whole basket of input costs.
Also giving us a sense on the current inventory levels and the production levels that Tata Motors currently is working both in the commercial vehicle segment and the passenger vehicle segment.
We took a lot of activities during the first half of this year, recognising that this is an unusual situation, and therefore we monitor our inventories at 1 month. We recognise the requirement for launches, we recognise the requirement for innovation and bringing new things to the market. We expect festive demand, as usual in India, will create some kind of excitement, but currently this year's trends are below last year's trends, so assuming we get some kind of boost during festive season.
High commodity prices have escalated the input cost for auto sector, and coupled with a weak rupee, it is becoming increasingly difficult to absorb higher spend on manufacturing. So will price hikes follow, or will subdued demand delay any price hike? The industry is clearly divided on this.
That brand new car may soon get more expensive. Automakers in India have started raising prices despite sluggish demand and negative sales, as rising import costs due to the falling rupee threaten margins.
We're at a point now that we are unable to absorb any further increases in input costs, and we are contemplating a price increase across our product range.
While General Motors has already announced hike in prices of its models by up to 10,000 rupees, Renault, Ford and Toyota are contemplating a price hike of up to 2%. Some other car makers, however, want to delay any price hike to preempt a further drop in sales.
I believe the way things are going on, we may have to look at price increase. It cannot be less than 1 to 2%. Minimum, we'll have to go for that.
The dilemma before most automakers is that a price rise may dent demand even further, which, as it is sluggish. Can Motown afford that? Or will it have to live with squeezed margins and lower profits? Sumit Chaturvedi and Kartika Trihan, ET Now, New Delhi.
Motown, like every other sector, awaits interest rates to soften and the demand to pick up. But experts insist the larger wheels of Indian economy will have to get in motion for Motown to once again drive in fast lane.